Bank of America. Yes, Bank of America. Are the banks crashing all the way down to zero? Or is it time to buy big in the banks in America? Yes, indeed, guys and gals. 2021, 2022, the stocks were flying. And now in 2023, or the end of 2022, we're crashing to the earth. Yes, it's the time to buy some of the sectors, guys and gals, in the bank sector. Let's buy some money. Let's get in, let's load the boat. Or is it time to walk away into the sunset? Yes, indeed. Let's look at, obviously, First Republic Bank going down to $150. From $150 down to $15. Charles Schwab, Western Alliance dropping 45%. Key Corp and Co America going down 30%. Bancorp 25%, and the list goes on and on and on and on. Yes, there's a time to look at buying into the stocks. Yes, JP Morgan, Morgan Stanley, Goldman Sachs, and of course, the one we're going to talk about today, Bank of America. Is it time to buy in, or will it continue to fall into a cliff? The bottomless pit that never ends. Or is it time to buy? Yes, in this video, all joking aside, we're going to look at Bank of America. We're going to do a bit of a stock analysis and a little bit of the history of Bank of America and see if you have the opportunity to maybe possibly look at investing into these. I'm not a financial advisor. Do everything at your own risk. This is just educational purposes only. Yes, Bank of America. Yes, let's look at a bit of the pros and cons of Bank of America. But remember, firstly, remember to subscribe to the channel, smash the like button, slam dunk it, so LeBron James you can be as good as LeBron James at doing the layups, as you lay up all that moolah that you're doing after you've invested into Bank of America. Just kidding. Let's get to it. Bank of America. Let's have a look at some news out of Bank of America. First off here, I hope you're having a lovely day out there. Remember to, if you're sitting back in your armchair, or if you're listening to this on the airport, at the gym, if you're watching this on YouTube, if you're watching this on the way to work, or maybe you're in your office having a break and listening to this, no matter where you are, I believe in you. Welcome to the channel, Barry Charles. Yes, Bank of America. Is it a stock to buy? Or is the bank system about to crash and this company is going to bankruptcy? Bank of America currently sits at $228 billion market cap, and this stock is down 30% over the last year. It could be a possible buying opportunity and reap rewards into the future if you're a long-term investor. Let's have a look at some of the roots of this bank back in the day. And initially was an Italian immigrant bank, Bank of Italy, until the merger and turned into Bank America. Then once Bank of America was formed, it acquired Nations Bank for a US $62 billion, which eventually formed the now known Bank of America. Once that acquisition happened, they built an empire, with Merrill Lynch being obviously one of their big components of the wealth management. The company right here, right now, at about $2.8 trillion in assets managed, which I believe is still behind UBS, but it's still outstanding. Bank of America, in a nutshell, has a wealth management group and sells commodities, credit cards, obviously, trading, insurance, mortgage, mutual funds, risk management, and so much more in their portfolio. Obviously, just in the announcements in the last few days, they have new presidents of Shimp and Huss taking over as the president of Merrill Lynch. whether or not they are going to be good, considering who has just left the company, who was absolutely believed to be a very good growth person, and Andy Sig, who will be leaving the company, going to Citigroup, but he's going to have 6 months leave of absence before he joins Citigroup. He has been known to driving big growth in the company, and making sure the 25,000 employees are doing great stuff, and also having a deep exposure in the US experience in the banking system. So he is going to be a big loss, and whether these two can take over. Obviously, the good thing about these two, they have been in the company for quite a while, so it's not like they're just coming in brand new. They've been around. One that's been there since 1994, and then the other one's been there since 2014. So they do have quite a bit of experience in the company. So you'd hope they are doing well. Obviously, the CEO, Brian Moynihan, has been at the Bank of America since 2004, and he has been the president and CEO since 2010. So has he been around too long? Have they really skyrocketed? There was the one question I had. Because he's been since 1993. He was part of Fleet Boston as general counsel, and in 1999 to 2004 he was the president and manager of Fleet Brokerage. And then obviously Fleet Boston merged with Bank of America, and now he's moved up to CEO. But the question is, over the last 12 years, has he really done much? The company only doubled the market cap. So has he really made this company go flying to the moon? So the answer is no. So not a world beater. But anyway, let's have a look at a bit of the stock analysis. Let's have a look at a bit of the revenue and all this, and see what is happening for this company. Revenue has been a little bit troppy over the COVID period, but is now leveling out to $92 billion in 2022. It'll be interesting to see if that continues going forward. Net income is a bit of an issue. 27 billion, but was down 4 billion from the year before, 31 billion. So there's a bit of question marks about how they're making profitability, even though it's great money, but more money needed. Free cash flow is a negative 6 billion. Don't know what's happening there. Where not too long ago they were a positive 38 billion a couple of years ago, so they really have lost a bit of money there. You'd expect they need to really get that back up and running. One positive though, very good positive, and this is why you may want to think about buying this company, is the shares outstanding has gone from 8.7 billion in 2020 to 2022, 2 years later, down to 8.1 billion. They are bringing you in some moolah right there. That is a good thing. That's very good if you wanted to buy. Basically, if you bought Bank of America in 2020, 2 years later, or two and a half years later, you now have the opportunity. You own 10% more of the company. That's basically what has happened with the shares outstanding, and it's an outstanding one for you out there. If you're investing in Bank of America, or you're looking to invest into Bank of America, if they continue to do that, then it's very good for you. One thing I saw on their Twitter page here is that for the 5th year in a row, they've been ranked one of the 100 best companies to be employed in the US US company system with Fortune magazine. This helps you as an investor know that they treat their staff well, trust their employees. If they continue that in the future, it could be good for long-term growth. But Andy Sieg is going to be a big loss. But there's a bit of I think this is a big con for me, and a lot of the big companies seem to do this, and maybe it's part of the parcel of the things. But to me, Merrill Lynch had to pay a settlement of $9.5 million due to failure to disclose foreign exchange fees to advisories. just craziness for me. They charge some of their clients over $4 million in undisclosed foreign exchange fees. It's just crazy to me that this happens in this day and age. Over a 5-year period, which also followed a suit in 2018 where they $8.9 million settlement for failing to disclose conflict of interest with some of their clients. This is a big turn off for me, and at the moment, it's why I'm not invested in the company. Because you keep doing that sort of stuff, you can end up in bankruptcy. At the moment, the stock price is at around $28. It was currently $36 earlier in the year. And it has been as high as $49 in the last couple of years. Is it a bargain now? Probably not. If I really wanted to look at investing into Bank of America, I would be wanting it to drop to about $20, in my opinion. If it dropped under $20, then I might start really considering buying this company on the risk-reward value. But why you might want to invest in this company right now is it does pay a good 3% dividend. And they have grown the dividend 15% over the last 5 years. Not the greatest, but it's okay. And the dividend growth has been the last 9 years. So not a super long-term dividend growth earner for you. But payout ratio of 27%, that's very good. That's very good. They can afford to pay that. So that's very good. I think long term, I think you would make money in this company, but it's not going to be like a Tesla or anything like that. But you'll definitely make money along the way. If you want to follow the GOAT, Warren Buffett, he has how much? 2.8 billion shares in this company. 1 billion shares, 1 billion shares at $28 billion value. Unbelievable how much of this money this guy's got. So if you believe in Warren Buffett and you think he knows what he's doing, then you could consider buying the stock. Yes, to me, it's going to Bank of America, for me, going into the future, I think this could be a good buy. For me personally, I'm not buying it right now, but if it dropped to the $20 mark, a better dividend yield, then I really would consider looking to buy it. Remember to subscribe to the channel, smash the like button, and we're going to have plenty more financial videos for you coming up. Thank you very much for coming along today, and I'll see you at the next video.